Okay, I'm going to take a quick look over here on some North American indexes here. Okay, I have the Dow Jones World Index right here. These are old trend lines that I'd posted in the beginning part of the year. This is basically how I looked at the World Index as an ABC pattern. They were moving higher, but now I'm kind of leaning that this may be the first wave down. This is reaction 2, and then we roll over. There are a few indexes that have broken out. Some are stalled like this. Some are double topped. Like I said, it's not that I find stocks overpriced, or we'll just say that they're fully priced. But a lot of stuff has been going down for about over a year now. Let's just say that the market's susceptible to some bad news. Whatever, China deval on the yuan. USA election, just the whole quiet sideways up on top. The only thing I can see that can help push this forward, since we can't seem to get much money in the system from the bottom up, is that the stocks that have been in correction mode since 2015, some 2014, jump back on board. Okay, but that's just basically sector rotation. So on here, I'm basically treating that, at best, I'll just say that this is a double top somewhere in this area. Okay, this is what I have here is a Wilshire. Wilshire is total market cap of stocks in the United States divided by plain old VIX here. This gives me an idea as this is higher divided by a lower VIX. This should have some highs on here. You can see here's 2015, it pulled down to here. In the beginning of the year when stocks came down, pulled down to here. Here was Brexit, pulled down to here. And now we're up above here at the previous highs. So to me, it's a low VIX versus a high in the Wilshire. And so now I would have to assume that it would come back down through here at the low. That's just a personal, just something I put together just to eyeball to find extremes. Here's the Dow Jones average back here in March, April, May period. Drew in the channel and put up my lines. This is basically how I was looking at how I thought things were going to go here, either up higher, which will basically, we have somewhat of a breakout, but if this is a classic pause, or this was the angle of the channel here. I'll clean this up. Down here I have MACD and stochastics on these weekly charts, and you can see that they're pressing. Doesn't mean that it's time to roll over, but it just says that, well, these are oscillators, and sideways doesn't, kind of slows the momentum down there. NASDAQ, as you can see, basically we'll just call this a double top, but it's basically a breakout and a pause. Stochastics is up here, and MACD, like I said, I'm not a big fan of it. If by chance it does break out, the angle of ascent will increase from here, which is basically a 45-degree angle, to it's going to move a little sharper here. Okay, New York Stock Exchange faltering. These are the smokestacks, just like the S&P 500 and the OEX and things of that nature. Certain indexes are making highs. People do the indexing, so they're still plugging into those. Compared to as we look further down on some of these other mid-cap type ones. Here's the S&P 500, broke out. This is pivots. This is pivot. This is R1 and R2. For next year's numbers, basically 2445 as of right now for the range that's here. 2300, 2061, 1928, and 1677. And you can see that the indicators are plugged up in here, but as you can see, they hang up for a while before we got some divergence coming in here, which was a period of time. Amex, basically a lot of your before they move, if they move off the, what do they call it, incubator type area here. That's how I look at that. Your Toronto Stock Exchange basically stalled the same thing. The Amex used to hold miners and drillers. That's where they would hide out, the smaller ones. What do we have for data? Okay, Toronto Stock Exchange stalling here at R1. right in the 50%. These things are, the indicators are buried. These are weekly, so you can break it down here. It just stalled at the 200 weekly moving average. Okay, I'm going to switch over here to the Australian dollar real quick. Aussie, and take a look at it here. Okay. I'm doing the yen thing too. Everything yen. Canadian dollar, or Canadian. There was the divergence down here before it took off. As you can see, here was the bottom of the MACD, and I'm not a big fan of it. It had a whole year of divergence before it came up here. These are a lot of volume here too. I'm going to guess that the wrong people are long these. You know, you take a $2 stock and turn it into a $20 stock. That's what, if you're getting 900%, that's usually what you get in a bull market over a decade. So, congratulations and you're welcome. Dow Jones Composite. This is the Dow 65, the utilities, the transports, and the industrials. Remember, it's price weighted. One share of stock is all it takes on a markup of $1 or a dime, and it affects it all. So it looks like we got ourselves a bull flag here. That's how I'll treat it. The pause here. What we're looking for is some sort of relief rally here. Transports, basically the same thing, back into the 50% range here. I saw an Amazon truck make a delivery, which was interesting. And then there's been some talk about it, so there's going to be some shifting, just like in the utilities. Hey, here's the utilities. All-time high. Okay, basically they were looking for yield. They also received capital gains. It was what the warmest July on record. So I paid up. Everybody paid up. You might have it here. What great timing to get out of the utilities. And they're beginning to roll over here too on this. It's momentum. I'm not a huge fan of dividends. Everyone else can deal with compound interest. I'm here for capital gains and compound that. Here's NASDAQ 100. MACD is getting up here, but it's basically, it looks like, what do we have, one of those dragon patterns. Sideways action again, a pause on the breakout. That's how I'll have to treat these. Russell, same thing above. These are the little cap stocks. We're able to get people to chase after, they chased after Brexit. They bought the breakout. We've been going nowhere. It's been digesting. But I look at what's been going on the underside of things. Here's the Russell 2000. And hasn't broken out. Okay, so the 1,000 has, the 2,000 hasn't. Here's a 3,000. 3,000 is broken out in its pause. I'm, like I said, I'm not hanging in for the last 10%. I feel, like I said, for the short-term trader, the risk is to the upside. To the money managers and those holding on, their risk is to the downside. And here's the OEX. So these are your big caps again. It's real simple. As the rest of the stocks underneath begin to roll over, you only have to pump 100 or 30 or 500, and those are the ones you want to own, right? I mean, if they've been marching up, those are the ones you want to take. But we're beginning to get some hooks up here. It should be interesting here for the next for the rest of the year. That's how I look at it, because this is going to have to reset here. The longer that it waits, things narrow, and it makes your triggers a lot. You're going to get some sort of whipsaw, and that's what's going to move this out, either up or down. For mid caps, as I mentioned before, when the commodity cycle, secular cycle blew up, you wanted to get into the growth stocks and get out of the smokestack ones, stronger dollar, things of that nature. And 600 mid cap, same thing. Those are the ones that are going to have the growth. As we switch out of one to another, draw your trend line here, but you can see the angle of ascent is going to increase from 45 degrees, basically go to 70. And here's your Wilshire total market. We're above it here too. This was the 2014 lows, matching of the lows and moving higher. But I'm not gonna wait. There's going to be something here. They're just to make things, they can chase after it, but then it's weak because you'll be fighting against a few other things. We've seen that interest rates in Japan, Germany, and the United States have been increasing higher. The truth is one thing, and people say another. And on the next one again, I guess we go back to the global index, and this is kind of how I look at it. This is the global. This is the capitalism on the whole planet here. The shallower the pullback, the more bullish it is. And we're down to, my next video will be over on country ETFs. If it pokes its head through here and comes through, this is a huge sideways pattern. I don't think we have enough oomph. Plus, I believe that the planet Earth is peaking out population-wise, so where we're going to find growth, maybe, hallelujah, we changed the retirement age to 55. I mean, not everybody can be on disability and collect Social Security, and where America is a what is it called in economics? Welfare state. Basically, that's what it is. What 84% of its service. We need bottom up, investment instead of top down. And the new guys, of course, are all coming in with their, their billions of dollars for an application, and that's short-lived. So too much greed on the VC side here, but bless them that we're not going through the traditional way of banks and stuff. Competition. So, but I'm not playing this extra here. I'm a little cautious. I'd rather short debt and play currencies that way than equities. Equities we've had a pretty good run. For me, from 683 up, I'm not hanging around for this one. So I think that's that for that, and there you have it. Happy Sunday the 4th, 2016.